China Lodging Group Limited, NASDAQ HTHT, is currently trading at a trailing PE of 59.4x, which is higher than the industry average of 25.4x. Although some investors may jump to the conclusion that you should avoid the stock or sell if you own it, understanding the assumptions behind the PE ratio might change your mind. Today, I will deconstruct the PE ratio and highlight what you need to be careful of when using the PE ratio. Check out our latest analysis for China Lodging Group. Demystifying the PE ratio. NASDAQ's HTHT PE peg gauge October 7, 17. NASDAQ's HTHT PE peg gauge October 7, 17. A common ratio used for relative valuation is the PE ratio. By comparing a stock's price per share to its earnings per share, we are able to see how much investors are paying for each dollar of the company's earnings. Formula: price-earnings ratio equals price per share divided by earnings per share. PE calculation for HTHT. Price per share equals 122.97. Earnings per share equals 13.77. For price-earnings ratio equals 122.97 divided by 13.77 equals 59.4x. The PE ratio isn't a metric you view in isolation and only becomes useful when you compare it against other similar companies. We preferably want to compare the stock's PE ratio to the average of companies that have similar features to HTHT, such as capital structure and profitability. One way of gathering a peer group is to use firms in the same industry, which is what I'll do. Since it is expected that similar companies have similar PE ratios, we can come to some conclusions about the stock if the ratios are different. At 59.4x, HTHT's PE is higher than its industry peers, 25.4x. This implies that investors are overvaluing each dollar of HTHT's earnings. As such, our analysis shows that HTHT represents an overpriced stock. A few caveats. However, before you rush out to sell your HTHT shares, it is important to note that this conclusion is based on two key assumptions. The first is that our similar companies are actually similar to HTHT. If the companies aren't similar, the difference in PE might be a result of other factors. For example, if you accidentally compared lower growth firms with HTHT, then HTHT's PE would naturally be higher since investors would reward HTHT's higher growth with a higher price. Alternatively, if you inadvertently compared riskier firms with HTHT, HTHT's PE would again be higher since investors would reward HTHT's lower risk with a higher price as well. The second assumption that must hold true is that the stocks we are comparing HTHT to are fairly valued by the market. If this assumption does not hold true, HTHT's higher PE ratio may be because firms in our peer group are being undervalued by the market. NASDAQ's HTHT Future Profit October 7, 17. NASDAQ's HTHT Future Profit October 7, 17. What this means for you. Are you a shareholder? You may have already conducted fundamental analysis on the stock as a shareholder, so its current overvaluation could signal a potential selling opportunity to reduce your exposure to HTHT. Now that you understand the ins and outs of the PE metric, you should know to bear in mind its limitations before you make an investment decision. Are you a potential investor? If you are considering investing in HTHT, basing your decision on the PE metric at one point in time is certainly not sufficient. I recommend you do additional analysis by looking at its intrinsic valuation and using other relative valuation ratios like PEG or EBITDA. PE is one aspect of your portfolio construction to consider when holding or entering into a stock, but it is certainly not the only factor. Take a look at our most recent infographic report on China Lodging Group for a more in-depth analysis of the stock to help you make a well-informed investment decision. Since we know a limitation of PE is it doesn't properly account for growth, you can use our free platform to see my list of stocks with a high growth potential and see if their PE is still reasonable.